I'll do a quick roundup of charts to follow through on what I presented in the last blog post, particularly in this case, the above the 40 blog post. So here's the S&P 500. It is still churning and still refusing to break that all-time high. I suspect that when it does, it will be a big move similar to what happened back here in April, but we'll see. We always want to get confirmation first. Now, as far as the Nasdaq is looking pretty interesting. It confirmed this 50-day moving average support right here by buyers taking things up the last 3 days. It looks like the Nasdaq is poised to challenge this double top here. And if that breaks, it is off to the races for some summer fun for the indexes here. Now let's take a look at the small caps. This is looking even more interesting. IWM, or the iShares Russell 2000 ETF, has been on a mini tear this week, or I should say the first 2 days of this week, and looks poised to break out of this trading range that's been in place for the entire year pretty much. And if it breaks this all-time high, again, it could be off to the races. In fact, I'm putting IWM on my buy list. I should have had it on the buy list yesterday. Now, the VIX, once again, is not quite cooperating. It is, despite these growing bullish signs, it is hanging out here and churning at the recent lows. So that is a wild card. We want to see the VIX break down further for the bullish run to continue. If it continues to hang out here, even with the major indices going up, I'm not going to trust the move, and I'll be very wary. Now, let's take a look at the charts that I posted in the last above the 40 post. As I noted on that last post, which talked about Friday's trading action, I sold my Martin Marietta Materials stock right here. It was a very reluctant sell, but I just thought the stock was looking weak as it broke down below this 50-day moving average, and it's bouncing back. Even though the 20-day moving average, this dotted line here, is going down, it's looking like Martin Marietta may want to come back once again. I'm actually not going to chase it one more time. I think the gas is running out a little bit here, and it probably will churn for a while. So I'll keep an eye on it because I like the commodities and the materials space, but I'm not interested in rushing back in like I did the last time after I got faked out. Now, Kohl's is looking like it wants to confirm a successful test of this post-earnings intraday low. So I'm still hanging out in my position here and still looking for a test of up overhead 50-day moving average resistance. Match Group worked out very well. It was a short-term play on holding this support here at the 200-day moving average, the blue line. Let me extend out the chart, and you can see that the test of the 50-day moving average resistance happened all in one move. So it was a 4% gain, 4% gain for the stock. I went ahead and took profits since it hit my profit target right away. I got my eye on this one. I'm going to keep buying it every time it hits or gets close to this low or support. And of course, the 200-day moving average is another potential entry point. Square, I didn't do anything with this one. It's also looking like a classic 200-day moving average trade for a bounce to the 50-day moving average. I've got my eye on it. I might get into it on Wednesday, tomorrow. We'll see. And just to note, a date stamp, today is June 8th, 2021. Whirlpool is another interesting development. I bought a put option right here when I thought that the stock had confirmed the 50-day moving average breakdown. So it was a follow-through selling point. Then the stock immediately gapped up on me here for let's see, what was that? Almost a 1% gain, but the 50-day moving average resistance held, and now the stock is coming down. I am really wary about the housing plays right here. Whirlpool is a housing play because it sells appliances that people will buy when they get new homes or when they move. and a lot of the stocks are just looking very wobbly. And I covered this in my housing market review, so if you want more details, go to the website and check that out. A new stock that I found, and I'm sure lots of people have already found this based on the Twitter chatter I was checking out today on today's almost 12% loss. So I saw this stock, Celsius Holdings, CELH, because it hit a new all-time high last week, and it's a breakout move. If you look here, this is the former all-time high, and this line here marks the breakout. So the stock broke out in a big way with a 15% move, and with today's 12% drop, it's almost testing that all-time high. That would be a good entry point as long as you keep firm on the stop below this breakout day, because once it falls below this point, that becomes a false breakout, and then anything can happen from this point. So I'm glad I'm still just watching it, and I didn't try to chase it on Monday's trading action. Got my eye closely on this one, but it's a buy as long as it stays in this breakout zone up in here. All right, next one, CCIV, Churchill Capital Corp. This SPAC holds my favorite EV play, which is Lucid Motors. When I grow up, I hope to own one and buy one if I'm very fortunate. I'm glad I stuck by this one. It helps that I like the car, and the stock, as I mentioned in the blog post, the stock broke out. If you didn't own any shares, this is the time to buy on the follow through to the breakout, and you can see buyers are just marching this one up higher. Who knows how far this can go? Next resistance, let's say, is around here at 30 at this peak point, but I just want to hold this one. I'm really a fan, and this is one of the rare stocks I plan on holding for an intermediate or long-term play. Next up, DocuSign. DocuSign was the big surprise last week with a monster. What was this? 20% post-earnings move. Buyers are still pouring into this one. You can see up here with these bars, the stock is opening and closing above its upper Bollinger Band. As a reminder, the Bollinger Band describes the volatility of a day-to-day volatility of a stock, and is defined here by the black bars. If I pull out, you can see DocuSign has been stuck in quite the trading range. In fact, for almost a year, it's been stuck in this trading range. So while this move is impressive, it's still nothing compared to where the stock has been stuck. So it's a little dicey to buy here, particularly after a big move. This is really one that will interest me once this trading range gets resolved, either to the upside or to the downside. But until then, I'm just watching. Schlumberger, I mentioned this one was a perfect move off the 20-day moving average. Again, this dotted line. I bought a little bit late, but I love this one. I'm a fan of the energy space as a contrary play for 2021. It didn't work out last year, but I'm back at it again. And Schlumberger looks like I'll just accumulate the stock. If the market wants to gift me lower prices, I'm taking it. Otherwise, this one could just keep churning higher for the rest of the year, from what I can tell. And then finally, Zoom Video Communications. Of course, this is a stock that was a play on everyone having to work from home and be in lockdown and use video communication technology to stay in touch and to do business. Now, with the pandemic effectively coming to an end in the US, Zoom is going to have to really scramble to come up with a new narrative and a new story. I think they're trying to do that, but after earnings, the stock pretty much went nowhere. It even drifted down to the 50-day moving average. You can see that down here. And then word went out that Cathie Wood bought more Zoom stock. She's a really big fan of Zoom as an innovator and a disruptor. And you can see here the buyers took it up 5%, 5.3%, and then they followed through the next day with another 2% move. Zoom is now in a bullish position. It's reversed its post-earnings losses. It's making post-earnings highs. So even though this area here is probably going to serve as tough resistance to grind through, I'm thinking of Zoom hitting eventually the 200-day moving average. It's really hard to do options on this one because the timing is very uncertain, at least to me. You can see all this grinding action that Zoom has had on its way down tells me that it could take a while to get to this 200-day moving average resistance. Not to mention, it would take some serious buying power to break through this upper Bollinger Band and push through to this kind of resistance in any short order. So have to be patient with this one, maybe buy a few shares, sit back and look at what happens. The stop, of course, would be on a new post-earnings low, which would go below the 50-day moving average. So this is the premier version of the follow-through for 122. Leave any comments in the YouTube channel or on the blog. I'd be interested in feedback, whether this is helpful. This is a way for me to just quickly go over charts that I mentioned in the blog. It's much faster to produce stuff this way than to write up another post. Because it takes time to write a post, I don't often follow through on stock charts, and sometimes I follow through a little late. So hopefully this format can be a little bit more timely for folks who are interested. Take care, happy trading, good luck, much success to everybody, and until the next time.